Over the past 14 months, life has been pretty good for Irish savers, at least comparatively speaking. We have more options at our fingertips than ever before for earning high rates of interest on our savings, something that was desperately needed in Ireland given the lackluster deposit interest rates offered by the likes of AIB, Bank of Ireland and PTSB. Now, we've previously spoken at length about the best savings accounts for Irish savers in 2024, and there's a general consensus in Ireland at the moment that Trade Republic is the best all-round option that's currently available. The rationale for that largely comes down to the interest rate on offer, currently 4%, the accessibility of funds, and the safety of funds. However, it's no secret that Trade Republic and similar competitors like Lightyear offer access to variable rate products. In layman's terms, the rate of interest that you're earning on your money today could very well change tomorrow, for better or for worse. The key determinant for the rate of interest that customers earn on these products at any given point in time are the interest rates that are set by the European Central Bank, or ECB. ECB rates increased significantly throughout 2022 and 2023 in order to fight Eurozone inflation, hence why we saw so many new entrants offer high rates of deposit interest to Irish savers. However, ECB rates haven't changed since September 2023, and speculation over an impending rate cut is starting to grow. While it's impossible to predict with certainty what the ECB will decide to do going forward, Irish savers need to start thinking about a world where the likes of Trade Republic and Lightyear are cutting interest rates. More specifically, Irish savers need to consider whether it would be wise to opt for a fixed term deposit product now in advance of any ECB rate cuts in order to secure a higher rate of interest for a guaranteed period of time. That is the key consideration. When it comes to fixed term deposits, one of the best options in Europe is Raisin Bank. And so we're going to explore whether Raisin Bank is the best option for Irish savers for 2025 and beyond. Before we go any further, it's really important to call out that Raisin Bank is the sponsor of today's video. The team reached out and asked if I could make an educational video highlighting the value of fixed term accounts to Irish savers and how Raisin Bank can help bridge the gap between those savers and competitive European savings accounts. As with all of my content, this video contains my own independent thoughts and opinions on Raisin Bank and how I see Raisin Bank as an option for Irish savers in the context of the current macroeconomic environment. If after watching this video you want to try out Raisin Bank for yourself, you can do so for free by clicking the first link in the description and comment section of this video. Using this link supports me as a creator and lets me know that you found this video to be useful. Thanks again to Raisin Bank for supporting the channel. Before we discuss Raisin Bank in any great detail, we first need to clarify the value of fixed term accounts, what they bring to the table, and why they are arguably more important today than any other time over the past 10 plus years. Unlike variable rate accounts, with a fixed term account, you're guaranteeing yourself a fixed rate of interest for a specified period of time, even if ECB rates subsequently fall, which is what the market is currently betting on. So you can see the value here. You opt for a fixed rate of interest before the ECB cuts rates, and in the event of a rate cut, your rate of interest is protected for the duration of the fixed term. However, Irish savers need to be proactive when taking advantage of fixed rate accounts. Reason being, like variable rates, the fixed rates that are on offer today will very likely change for better or for worse after there's been a movement in ECB rates. But if you lock in your fixed rate before an ECB decision is made, then you won't be impacted by any subsequent change in the fixed rate that's offered to customers on a particular fixed term account. The next ECB meeting is on April 11th, and after that it's June 6th, and decisions over ECB rates are made at these meetings. If you're of the belief that ECB rates will start and continue on a downward trajectory for the foreseeable future, and if you know with certainty that you won't require your cash for a specified period of time, then it could very well make sense to take advantage of a fixed rate deposit account today. ECB rates are unlikely to go any higher from here, and we've already started to see rates on certain fixed term deposit products come down in anticipation of lower ECB rates in the future. But ECB deposit rates remain at record levels, at least for the time being, and so there's still an opportunity to avail of fixed rate accounts that are reflecting the current interest rate environment. But but one must be proactive, otherwise the boat will be missed. One of the easiest ways for Irish savers to get access to high interest fixed term accounts is by using Raisin Bank. For those who don't know, Raisin Bank is an online marketplace for savings accounts across Europe. They allow savers in one country, like Ireland, to access the savings accounts that are on offer in different countries all across Europe. Put simply, Raisin Bank acts as an intermediary between savers and banks. The idea is that if you live in a country where there are little to no savings accounts offering competitive interest rates, you can access the high interest savings accounts which are available in other countries via Raisin. In the historical context of AIB, Bank of Ireland and PTSB offering abysmal deposit interest rates, you can see why an offering like Raisin's has become popular amongst Irish savers. In fact, for much of 2023, Raisin Bank offered access to the most competitive interest-bearing deposit account for Irish savers, which was a 4.25% account offered by Banco Português de Gasto. According to their website, Raisin Bank has over 1 million customers who have invested over 55 billion euro into the various fixed-term accounts that are available on the platform. Over 1 billion euro worth of interest has been accrued on customer savings via Raisin. The company is partnered with over 400 banks and financial services providers across 30 plus countries and is backed by world-renowned investors. More importantly, Raisin Bank is authorized and supervised by BaFin, who are the Federal Financial Supervisory Authority in Germany, and they're regulated by the Central Bank of Ireland for conduct of business rules. In layman's terms, Raisin Bank is being subjected to the highest of financial regulatory standards, making them perfectly safe for use, a prerequisite for any company that you choose to keep your money with. A common misconception about Raisin Bank is that it's a normal bank. It isn't. You don't use Raisin Bank to receive your paycheck, you don't use it to make transactions, and you don't receive any sort of physical debit or credit card for spending. You solely use Raisin Bank for the purpose of depositing your money in high interest fixed term savings accounts that are offered by Raisin's partner banks, of which there are currently 12 in Ireland. Therefore, it's not necessary to switch banks in order to use Raisin. You simply transfer money from your current bank account to your Raisin Bank account as you wish and allocate that money to whatever partner bank you're looking to deposit in. It's as simple as that. Another common misconception is around fees. Raisin Bank is 100% free to use for Irish savers, no strings attached. There are no hidden fees to be aware of. If you're wondering how Raisin Bank makes money, they get paid a separate referral fee from their partner banks as a reward for sourcing and facilitating the deposit between you, the saver, and them, the partner bank. This fee does not impact you or your returns in any way. A critical question to answer is, how safe is one's money with Raisin Bank? All of the fixed term accounts on Raisin Bank are covered by the European Deposit Guarantee Scheme, just like AIB, Bank of Ireland and PTSB. This means that you can invest up to 100 grand per financial institution on Raisin Bank, which is obviously much greater than 100,000 euro in total. This is then taken a step further, as all uninvested funds in a customer's Raisin account are also protected up to 100 grand under the German Deposit Guarantee Scheme. In practice, there will be no real reason for a Raisin customer to hold uninvested cash in their account for any prolonged period of time, given that it wouldn't be yielding any interest, but it's still reassuring to know that one's cash is protected whilst uninvested. In terms of the fixed term accounts that are currently available on Raisin, there are many to choose from. Many savers will be tempted by the 1 year account with ING Banco, as it's currently ranking as the highest rate on offer at 3.5% as of making this video. However, there are more factors to consider beyond the headline interest rate when selecting an account on Raisin. Firstly, there's the fixed term duration. Durations can vary from less than 1 year to 5 years depending on the account. The reason why I mentioned earlier that there's a need to know with certainty that you won't require your cash for a specified period of time is because the trade-off of a fixed term account in general is that your cash is locked up for a specified period of time in return for a fixed rate of interest. This is referred to as the term on the Raisin marketplace. As a result, fixed term accounts require a little more thought before depositing, as you need to ensure that you choose an account with a term that aligns with your expected need for cash, because once it's invested, it's inaccessible. To briefly illustrate the value of this, imagine a scenario where you knew for certain that you didn't require, say, 50,000 euro for 5 years. You could lock in a 3.25% interest rate for 5 years with TF Bank bank via Raisin, and you wouldn't have to worry about any ECB rate cuts impacting your deposit interest for that period. Secondly, there's the minimum investment amount. All accounts on Raisin have a minimum investment amount of some sort. Rarely, this will be as little as €1, but more commonly, it will be between 2 and 5,000 euro. Certain accounts have minimum investment amounts as high as 20 grand. Clearly, you'll only be able to utilize the accounts which you have enough cash for in order to clear the minimum investment amount. Thirdly, there's compounding. Certain accounts on Raisin will allow you to earn compound interest, i.e. earning interest on interest that you've already earned. This is achieved by capitalizing your interest after a certain period, say annually, which just means that the interest is added on to the amount that you're owed, which in turn allows you to earn interest on interest. This will automatically be accounted for in the annual effective rate, or AER, that you see displayed on the Raisin marketplace, but it's just helpful to be aware of where these figures are coming from and how accounts differ in their interest calculations. Fourthly, there's withholding tax. Any account on the Raisin marketplace that doesn't say no withholding tax will be liable to a withholding tax at source before the interest is paid to you. In layman's terms, a certain percentage of your interest will automatically be taken as tax by the taxation authorities of the country in which the account is based. The exact percentage varies from country to country, and in certain countries like France, Sweden, and Italy, there is no withholding tax. In my opinion, accounts on Raisin that come with no withholding tax are much more valuable than their withholding tax counterparts. That's because they allow for a significant cash flow advantage in the sense that you'll receive 100% of the interest earned, as opposed to a lower amount which can then be withdrawn or reinvested. You'll still have to pay deposit interest retention tax, or DIRT, at a rate of 33% on the foreign interest that you've received as part of your Irish tax return, but being able to delay the impact of taxation until the appropriate Irish pay and file date, as opposed to suffering tax at source via foreign withholding tax, is a very valuable advantage indeed. Where foreign withholding tax has been suffered, you'll still have a liability to Irish DIRT on the gross amount of interest, i.e. the interest before withholding tax, but you'll likely be entitled to receive a tax credit for the foreign withholding tax paid. Finally, there's the credit rating of the country in which the account in question is based. This is the sovereign credit rating, not the credit rating of the bank you're depositing with. This may seem like strange information to include, but my understanding of Raisin's decision to do so is as follows. Under EU legislation, member states, including Ireland, are required to provide a guarantee to depositors that their deposits with banks in their respective countries will be protected up to the value of €100,000 per bank, i.e. the deposit guarantee scheme. Each member state is required to have a deposit guarantee fund, which is effectively a pool of money that's funded by way of a contribution from the banks that are covered by that member state's deposit guarantee scheme. In other words, banks are partially funding the cost of a potential bank failure in the future today. In the highly unlikely event of a default, the money needed to repay depositors would come from the deposit guarantee fund of the country in which the default occurred. But what if that fund is insufficient to repay all depositors? In that circumstance, the European Banking Authority states that alternative means of financing may be used to fund any deficit, giving the example of temporary state financing. There could be a rare scenario where a country is unable to raise alternative means of financing to fund the deficit because of their sovereign credit rating, which is my assumption over why Raisin opted to disclose it. In such a hypothetical scenario, there could be a delay in receiving repayment, which is currently required to be made in 7 business days. However, that scenario would also require an unwillingness on the part of the ECB to provide emergency funding, so take any concerns with a grain of salt. Before you deposit any money into a fixed term account on Raisin, you should spend time reading the product information sheet for that account. The product information sheet can be found under the offer details of each fixed term account on Raisin. This will tell you everything that you need to know about the account, including the product description, the potential returns, taxation, costs, prolongation at maturity, the availability of your deposit, risks, and revocation. In conclusion, Raisin Bank is a fantastic option for Irish savers who are looking to lock in high rates of deposit interest for a known period of time in advance of any upcoming ECB rate changes. Raisin Bank is most suited to those who understand the value of fixed term accounts and have the capacity to live without their deposit for the duration of the fixed term. Naturally, an offering like Trade Republic that offers instant access to your funds as well as the current best-in-class interest rate is going to be more accessible and arguably better suited to the average Irish saver in the present day. However, the value of Raisin Bank comes from being proactive so that you can continue to enjoy a high rate of interest in the future, even when macroeconomic circumstances change. Understanding the difference between those two lines of thinking and the value of each is very important. So if you do want to try out Raisin Bank for yourself, you can do so for free by clicking the first link in the description and comment section of this video. It's important to note that the interest rates and fixed term accounts that are on offer on Raisin Bank are subject to change over time, and certain information in this video may be outdated by the time you hear it. For more information on Raisin Bank and their current offering, visit raisin.ie. Let me know what your thoughts are on Raisin Bank, and if you've any questions on any of the content that was covered in this video, please don't hesitate to leave a comment down below. Thanks very much for watching, and I'll see you in the next one.